Okay, hey everyone. In this video, I want to show you how I entered into this trade using the momentum divergence tool, Fibonacci retracement tool, and support and resistance lines while using the trading platform Bybit. So on the screen here, you can see that I'm already in a trade. When I looked at the Fibonacci lines, you can see it here. It's very light, but if you just look at the screen, you'll see that 0.62, 0.7, 0.79. Well, there's a 1 and a 0 on how this tool is used. So if you give me just a moment here, I'll pull up some measurement tools on the side so I can talk through some things. Recently, we had a huge pump, about a 4% rise. And what I do is, after these large movements, I use the Fibonacci retracement tool to help me determine when the next best entry is. So if you look here, the 1 on a long sits at the bottom, the 0 on a long sits at the highest point of the move. Now what that tells you is, when you look further back down, you can see the 0.62, 0.7, 0.79 there. Normally most retracements will come down to the 0.62 level. You can see here in this move that it faced a lot of resistance in getting down further. I mean, look, it barely even made it half of the way from that full move. So what I did is I actually moved my base to the next move up. You'll see here shortly that I moved my, I believe it's the 1 position to the next red section. Alright, I'm just getting that adjusted. Actually, what I'm explaining here is, if you're in a short position, all you have to do is move the 0 to the bottom and 1 to the top. Long position, 1 at the bottom, 0 to the top. Pretty simple. The percentages that I have are based on custom settings. If you right click on it and click format or settings, depending if you're looking on Bybit or if you're looking on TradingView, these settings that you hear see in the first column, -1, 0, -27, -6.62, and so on and so on, those are the only values that you have to change to see the same presentation that I have here. This was recommended from Counting Aces, so shout out to him for educating me on this tool here and getting the configuration set up. So as I mentioned, most retracements go down to about the 0.62 level. As you can see, it barely even touched. So either 1, it's facing a lot of resistance, or 2, it could just be that I'm at a wrong starting point. So what I did here shortly is I moved the bottom to where the next bump up was. And actually that dot should be sitting at that low around the red. But anyways, it helps exemplify that the retracement normally does go into these levels. Now what happens is it will either retrace down to the 80% level, and that's a good entry point to go back into the continued path of a long. I'll show you in a later section of the video why I decided to continue with a long play here today. If it ever goes down below that 1, I'm out, because it's basically retraced all of the entire gain. It was basically a pump and a dump. So I take my losses and I move on to the next trade. But anyways, that's why I try to re-enter in at the a pretty decent level between 0.62 and 0.79. Now what I showed you there on top is, you see 0.27, 0.62. If this breaks out above the next the highest high, which is at 1044.91 here, you'll normally see a movement to about 27% to 62% above. Now if I measure that, and I'm measuring it here from my entry position, or around where I would like to get in around the 0.62 level, you can see even if I just got to 27% at 100% gain, that's 100% leverage, that's 168%. You can go 50x leverage to reduce your chances of being liquidated, and that's still a 80% gain, 25%, 40%, still all good money, right? So don't get greedy. You'll never find 40% on the regular stock market. We're trying to get in and out quick. So I mean, I'm obviously guilty of that. You can see down below I'm at 50x, but you know, that's just me, and that's my trading style. And I'm a high risk taker, and I like to get in and out quick. Perhaps on this one, because I was trying to play a bounce off of that, and that can take anywhere from 30 minutes to 2 hours. I probably should have gone with 25%, but you know what? I said, fuck it. I'm going for it. I'm a dumbass. So what? Let's roll with it and let's make some money. Don't follow my lead, guys. Please be conservative with your trading until you actually get it right. Anyways, so continuing on with the video here, I'm just looking at other points of entry. If I missed, you know, this lowest point right here, we're still seeing reasonable returns if it bounces up above the resistance levels. Now, if it doesn't and it goes in the other way, if you're in on a long, you better make that decision to get out. Now, another thing I wanted to describe here is this thing called momentum divergence. It's actually a free tool. This is a play off of the market cipher that people are paying like $1,000 for. So, you know, luckily Gay Dad on our Discord was kind enough to share with me his connection, who knew this one coder trader who basically built the same thing off of indicators that are already out there in the market. And, you know, with some custom code that I think he took about 2 weeks to build. And here we go. We've got a tool that you can use that is essentially free. You just got to go to this guy's site. You can see his name is Andres Vasconez on TradingView. Just go to his page and just request access. Now, when you get this indicator, there's a bunch of other things that are on there. Now, I posted on the Discord how you can reconfigure this based on another guy's YouTube video. You don't need everything. You really just need the dark blue clouds, the light blue clouds, the yellow line, which is called VWAP. I have no fucking idea what that stands for. I know it just deals with like price and momentum. Google it, you can figure it out. The basic rule is that if the yellow line crosses above zero, you're getting ready for a long position. If it crosses below zero, you're getting ready for a short position. Watch that other video that I put on the Discord, and that guy does a way better job at explaining it than I do here. I'm just trying to show you what my settings are here. So you only need the plot VWAP, which is the yellow line. The plot RSI, relative strength index, is the red line. And the light blue and dark blue are your momentum 1 and momentum 2. I like to change the transparency of it a little bit because I like to see the lines that sit behind it, but that's my own personal preference. Anyways, moving on. Like I said, you can get this from that guy Andres Vasconez. So, you know, there's his page right there. Just click on scripts, go down, look at momentum divergence, click on that. Once this loads, scroll down until you see a blue button to where you can add it to your favorites in your indicators on tradingview.com. Add it to your favorites. Give it a second here. I'm scrolling down trying to find it. Went too far, got to go up a little bit. There you go. I've already added it, but just click that blue button right there. And it's protected by him, so once you do that, you message him. You can message him here in the comments, or you can private message him. And the guy's pretty quick, you know, 24 to 48 hours, you'll get it. And there you go, boom, $1,000 saved. Use that towards your trading, or take your wife out, or your husband out, or whoever you have. Yeah, but look, this picture just shows like so many different indicators. You really don't need a lot. You can keep it simple right here. But look, I want to kind of tell you about the trade that I'm in right now. So, you know, like I said, I went 50x on a trade. And what I did is I looked at it from a long-term view, even from the monthly view, all the way down to the 4 hour to get a pretty good sense of where the market is going. So if you look at the monthly view, clearly you can see for the last 1, 2, 3, 4, 5 months, we've been in a upward momentum. I like to look at the regular candles because it tells you the actual movement within those months rather than the average pace. Now, Heikin Ashi is good if you want to, see the average pace and kind of get just a clearer view of the overall momentum. Now, when we switch over to the weekly view, overall still, an upward growth there in price, but we've had, look, 1, 2, 3, 4, 5, 6 weeks that had some down months. And let's see here. The other thing I wanted to explain, the dark clouds and the blue clouds. The other guy explains it really well. When you see the light blue clouds get covered up by the dark blue clouds, that's basically just an indication that whoever it is that has that momentum is losing strength. So if the cloud's on top, then it gets covered, that means that the longs are starting to lose their momentum. Then you look at the yellow line, like the other guy says in the video, once it crosses over zero, I'd say pull out at that point. Another thing I like to do is I like to establish my support lines in the way, or actually, no, sorry. With this chart, you don't really get a clear line for zero. So I add a horizontal line here so that I can see where it's crossing in and out of that zero mark. So you'll need to do that manually. So yeah, again, moving on to the day view, it's just a lot of sideways action, a lot of opportunities for ups and downs. With this, it doesn't really give me a pretty big picture about what's going on in the overall market. Obviously, the monthly and the weekly was already telling me that we're in a long position. If you look at the weekly and you look at this cloud, you can see that it's crossing over into short territory. But is it really? You need to go a little bit further. So I'll look at the 4 hour. The 4 hour is a pretty reliable time frame. Just look at this right here. You see those green dots down below? Those are only indications that it's at the bottom of its current section. So you have, your VWAP at a low point. You've got your momentum at a low point where they're diverging. Your relative strength index is low as well. Normally what they say, and you can watch the other CryptoFace videos, but these green dots are just help you indicate that it's getting ready to have a buy moment. What you got to look at in those blue clouds is you see that those little double dips right there. After that green dot, it kind of goes down and then it goes up again. That's showing you that they're losing strength and it's getting very close to crossing over. So some people at this point on the 4 hour would say, okay, yeah, definitely long, hasn't yet crossed over yet, but pretty soon we're going to be getting past that point and making that move upward. All right, so here I'm drawing a line so you can see that momentum displayed in the clouds, right? So you got one big cloud going down, another little cloud going down. These clouds aren't always all in one cloud. Sometimes they can be, one that goes up to the zero line and another little one that forms. But the opposite stands true for the longs as well. You'll have a high point on the cloud, and then you'll see a series of low points indicating a drop. Basically, this is just saying that it's losing its momentum and it's going to eventually reverse. So now we're into the 1 hour. From 7 o'clock we had that pump, and then we got down into a low territory, and now we're at a point where the price is rising again. I can't really make a decision on an entry there on the 1 hour, but again, I just always refer back to the 4 hour or the larger time frames, and it tells me that my position is long. Now, moving into the 15-minute, it gives me a decent overview of what's happening, but for me, I personally like the 5-minute, 3-minute, and 1 minute to pick my entry. So here, on the 15-minute, you can just see a while back. Here's another example of there being an upward momentum, indicating that there's going to be an upward movement here. So if you would have gotten in at the point where the green dot is, or where the prices diverged, you could have had a pretty decent gain there. Again, so now we're moving on to the 1 minute, and we see some very small movements. I know the clouds look pretty big, but it's actually pretty small because this is really just a continuation after the pump up. So you see we had that huge pump, right? And let me change this to Heiken because from what the author of the code says, it affects the way the momentum divergence is displayed. So yeah, we had that rise, and you could see after that big pump, it started to lose some momentum. You see the top of that cloud going down, crossed down below a couple times, had some decreases, some pretty decent opportunities there after the pump too. Look, you could have made 57% if you had 100x. Here you could have made 99% on 100x on a short. I mean, typically with rises, there's going to be some retraction, right? People are going to want to buy back before. So, you know, when there is a pump, if you're quick enough, you might be able to capitalize on that. Now, as we move toward this other section, look, I entered in a little bit late, but I can already see right now I'm positive on the trade because anything above 415 is telling me that I'm going to be positive on the trade. Now, if you go back and you look at the 1 hour here, I believe that, let me see what I'm trying to, I've gone back and forth so many times, honestly. I mean, overall, you just go with the longer time frames up to the 4 hour, you trust the direction, and you work it from the lower time frames down. But yeah, this 1 hour basically exemplifies that big drop and then the rise up. So back into the 1 minute, I was in a long a while ago already, but you could see that, you know, on the right hand side we had a pretty decent pump up to like 1049, and this is the point where during the making of this video I started to see this pump and I was getting pretty excited, and my computer started to freeze. So I'm thinking, shit, I gotta do something or else I'm not going to be able to execute on this trade. Another thing I like to do, I like to go to BitMEX and look at the liquidations, because that helps me figure out, is there a change in that direction? Is there additional momentum? You start to see liquidations, you know that the other party's starting to get, you know, wiped out, or someone's taking their profits on the way up or down, in this case on the way up. So look, we had our first set of liquidations and boom, we got our second bubble. And I guarantee you when we go back and watch this again, you're going to see more liquidations, because this thing is making a pretty significant rise. The strength is high, the red line is high, the yellow line is above the zero. The clouds are still showing a slight degree of light blue. You see that? That's showing that there's more buying than there is selling right now. And so this thing is gonna, you know, keep pumping. There's a green bar that kind of helps you see, I guess, the green and red bar at the bottom that helps you see whether you're in a short period or a long period. Let's see here. Yeah, so let's progress a little bit forward. I have no idea what I was trying to explain here. I'm redoing my audio over because for some reason my screen recording didn't record the audio. So just be patient with me. We're going to get somewhere soon. But yeah, so just to recap, look, that large pump, right? You look on the left-hand side, it had a big pump. I'm going back over here now to BitMEX, and look, it was at 2 a while ago. Now we have a couple extra liquidations. I clicked on the wrong one, but I use that to do my conversions from time to time to know what I'm going to make my entry into. Yeah, and so this is the part of the video where frickin' my computer froze up. But I'll tell you now that in that trade I had $500 in the trade. Didn't have to get liquidated, although I did move it down to 50x. And